Hi guys, how's everyone doing? Ace of Trades here. I know it's been a while since my last video. I think it's been somewhere in the region of 2 years since my last YouTube upload. Um, and yeah, I just thought I'd get back into the habit of making YouTube videos. Really, I'm still trading, still learning, um, still cracking on with it. I need to stop saying I've still got that habit for some reason. So yeah, basically, I wanted to hop on and just talk a bit about what I'm trading now, how I'm trading now, how my trading's changed in the past 2 years, and yeah, just have a bit of a chat really about psychology and things as well, because the past 2 years haven't been easy. I'm into my third year, or 3 years into my trading journey, so still not where I want to be. A lot better than I was, and weekly and monthly I can see progression in my trading all the time. Um, but I'm just not sort of quite where I want to be in terms of financially, skill set, and it is a massive learning curve. So you can probably see on my screen now that for anyone who has watched my previous videos, the way I trade it is not the same. It's still smart money concepts, and I still use supply and demand, imbalance, breadth of structure, liquidity. I just have a different sort of entry model. So on the left over here, you can sort of see my swing entry model, where essentially it just looks for a sweep of liquidity, break of structure, and then you put on your Fibonacci levels at these areas to and expect price to continue. So essentially, it's expectational order flow and liquidity concepts with a Fibonacci entry model to continue to get in on the continuation move of a trend, basically. And you can see, it works quite well. I mean, on every single pair, I've tested every pair over, about a 3 year period. And on every pair, you can make somewhere between, 4 and 6% a month with about 60% strike rate. I'm just using the 4 hour alone. So the strike rate's quite high. The percentage is lower. You can see it's 2.5% per. Well, it's actually not 2.45% per trade, but I usually let it run a bit after, just to take full advantage of the liquidity. And yeah, again here, you can see a little sweep of this Mon low in here. We've got some imbalance. We've got the push. We sort of come back slowly, and this one took quite a while, but it did eventually hit take profit 30 days. So 30 days for 2.4%. Some people might not be happy with that, but if you've got big enough capital, which I don't yet, but I will in the upcoming months, then it's not too bad. But again, even if you got 100k, you're doing a couple of those a month, you're laughing. It's replaces your 9 to 5 job. Anyway, so the reason for sort of this video was more because I just lost my train of thought then. But basically because I want to get back into making videos. I enjoy making the videos, and I want to show you all the experiences and the roller coaster it is to be a forex trader. It's not an easy task. It's not an easy career. Every day we are trading against some of the biggest institutions and banks, corporations in the world who have the smartest people in the world working for them and trading for them. So it's by no means an easy feat to be a forex trader, or whatever people want to call it these days. So yeah, essentially, I'm going to run over some recent trades, some recent psychology, because a couple of weeks ago I had probably I experienced my first losing streak, and it sort of set me on a bit of a wobble, and my psychology sort of got quite bad, and I thought, is it working? Does this work? I know for a fact it does. I've forward tested it countless times. I've done challenges with it. I've back tested it, for hundreds of hours. Hundreds of hours. So I know this stuff works. It's just I just had a bit of a wobble, to be honest. But yeah. So essentially, if anyone has watched any of my previous videos, my strategy and the way I trade is based around the 4 hour and 15 minutes. That hasn't changed really, apart from if I put on a swing trade, like you can see over to the left there. So what I do is I use my 4-hour highs and lows. So my 4-hour ranges essentially. So we've got what we've got here is we've got this, then we've got sort of the change that does break above there, and then we start to put in sort of this structure here. We've got, I don't know if I really count this as a pullback, but you potentially could use sort of something like this. I only count one break of structure. This is supposed to be here, and we've got, well, actually that's the high, but I don't know. See, structure is subjective and it looks different on all my charts. So you can see Euro AUD I've got here. It's got this and this to there, sort of in the range, and then we've got the sweep. But all charts do look slightly different. So I use FXCM just for my back testing, and this is Oanda that I use. I don't know why that's Oanda, probably because it's a 15-minute chart. I'm waffling on. Anyway, it doesn't matter. So yeah, this was during this time period. This is my thought. Oh, this was my thought process at the time was, this is my high and low, my swing high and low. We have taken some liquidity in here, and so this is just below the premium of pricing where I'd look to short from. Just literally on the edge of it. So I'd probably look for price to come up as it does. We break above, but one break of structure to me, or one candle close above structure, is just a liquidity sweep, and this is sort of only really internal structure. So essentially, it's the same as what I used to do. It's 4-hour ranges, and then I use the 15-minute in between those 4-hour structures to, let me just get rid of this for a second so you can see easier, to get in and get my entry model. So what we would expect now after prices come up into this area of premium, so above this blue line here, this is all what we consider premium pricing. So let me just put a P there, and this is what we call the discount of price. Obviously, if price is low, it's discounted, same as you'd see, if you buy anything, if you go to a shop and something's low price, you'd say, oh, it's been discounted, or the price has gone up, it's a premium. So that's the smart money concept. So you want to sell high and buy low, basically, is a theory behind it. So once price gets up somewhere into this area, I mean, first of all, actually, let me talk about this. So once price is, let me fuck off, shit, I swore. So once price has broken this low here, or even this low, I mean, I would expect price to start pulling back somewhere into the premium. We know that it's happened for sort of centuries. Well, not century, but since the market opened, price likes to trade from premium and discounts. It's just as simple as that. So where is this bit of price? So it's here. So once we break this low, essentially I'd be looking for just sort of the same thing again. So I break a structure, which, I mean, this comes back, we get a 3-candle pullback. So we get this. I also look for flips. I've started using flips again as well, which we've got here. So we've had a breaker structure. I would actually just class this at the minute as a momentum shift, because we've not started to create bullish structure again to the upside to get us back to premium. Where's our liquidity? This is really our liquidity, and then there. So really, to trade back up to premium, you put something like this on. I mean, with premium trades, or sorry, counter trend trades, I don't hold past the 15-minute target, just because at any point it could reverse. So, I mean, you can see how perfectly this comes back to my entry model, and then just sort of runs off. So let me just talk you through this again, and then I will explain as well why I have been having a bit of trouble with psychology. So price, we can see, is actually, let me reset the scale, is bearish. So from sort of this point here, it's highs and lows, highs and lows, highs and lows, coming down, obviously. Lower lows, lower highs, lower highs, lower lows, lower highs. So when price breaks this low, or even this, what I'll be looking for is somewhere, well, anyway, I mean, if price sort of carried on just shooting down, doesn't matter how far it goes, I'm watching the 15-minute, and I'm thinking, okay, well, when we find the breaker structure to the upside, again, the counter trend breaker structure, when we find that and we get a flip, so we can say, okay, demand is starting to take control of supply again, that's when I will look to enter on a counter trend. And you can see my entry model. So we've got a really sort of big impulsive push to the upside. So that's really quite impulsive. We stop and we get the chuck. So we have to stop to get the, not a chuck, sorry, what am I about, the flip. We have to sort of get this reaction for it to be a valid flip. So now I know that's valid. We've had the momentum shift, but this 3 candle pullback here, which I will class as structure because it's a 3 candle pullback. Then I can be, sort of confirmed, or I've got all of my confluence I'd look for to go bullish. We've left some imbalance here, which doesn't actually get filled, but I need to see some imbalance for my entry model to be valid as well, or at least the majority of the time. There's no liquidity sweep, so I need the imbalance there, and it is a window of imbalance as well, as imbalance on both sides of the market. So essentially then I just drag my fib from the bottom to the top, put a limit order on here and let it run, and as you can see, we get the take profit. Let me just scroll back to the. So you could hold this if you're feeling brave to, this 4-hour supply zone. No problem with that at all. You could hold this to the top of the, or to the premium level, to the equilibrium, to go up into the premium. Lovely trade, 9.7R. I don't like to do that on counter trend just because I know how volatile it can be and reverse sort of quite easily. And that's a trade I actually missed. So I was trading every single forex pair, majors and minors, no exotics. And I've recently narrowed it down to a list. I'll show you sort of this list. I don't know if you can see this, but if it's going to load. Yeah, okay, it's not loading, but okay. Yeah, so this is my forex list now. This is the only pairs I trade, because again I was missing nice opportunities, and these are the pairs that I found I get the most opportunities that sort of play out. I am actually about to be in a short from here down to sort of this low, but it's not. It isn't a 10-10 trade. I'm not convinced, but I'll talk you through that in a minute after we've gone through this anyway. Yeah, so so after we get back into premium price and we get the liquidity sweep and price starts to push back down, exactly the same sort of thing. For me to confirm that price is looking to push back to the downside, I need to see a flip and a breaker structure. So here we don't have the breaker structure yet, in terms of if we're looking for true structure. So true structure would be sort of this low here. I'm not going to wait for that to go because that's ages away and I'll miss my entry. I know this just from experience. But what I can use is we have a flip. So this is the last point of demand that pushed price higher. And it gives us a reaction. So we know it's a valid point of demand. So it fails here. We come back and mitigate this supply zone that caused the failure of demand. This area of supply is the last one here, and it eventually causes failure. This starts to hold, and then we do break to the downside here, giving us a momentum shift. So the only thing I would look for here is liquidity. Well, we've got this high, which gets swept. So I'll be more than happy to sort of take that liquidity sweep in there. And then again, Fibonacci from the high to the low. We do build some liquidity sort of in here as well, and get some inducement for the zone, which I always like to see. If it starts pushing back down here, I'm not too worried because I know it's likely just inducement, and people are trying to enter off something like this fair value gap, but there's no liquidity taken. There's no liquidity taken to the left. Nothing in here has been swept. This hasn't swept anything. This hasn't swept. This takes out these two, but people are likely going to have their stops above here or somewhere. And then once price starts to push off, people are going to think, fuck, I've missed it, and try and get in. So yeah, so this one, I mean, I didn't hold it to the low. I think I held it to somewhere around here. Let me have a look. Was it about maybe this one? Yeah, it was about there. I held it to. I'll keep it so low for now, just for the video's sake, anyway. But yeah, so that's pretty much the entry model. High to the low, because it's now pro trend. You can hold it to the low for a sexy little 13R trade. And then let's have a look what we've got here. So yeah, so we've got a new high and a new low. Obviously, that's not confirmed as a high yet, but now we start to push down. We would assume that, and we would. This low here is weak, as it's failed to take any sort of structure really. So this would be. Oh, I didn't put that as a weak structure. This would be classed as a weak low, so that would be our next target realistically. The setup I'm looking at the minute is, is this one. So from the high to the low. The only thing I don't really like about this is that the New York session is my high for entry. Obviously, there's liquidity above and below every session. We've got inducement that's now been swept. We're currently in New York, so it's a perfect time for us to enter really. We've got imbalance, we've got the momentum push, break a structure. We've got the liquidity sweep. I mean, it takes out this Asia high, it takes out this high here as well. So it's a valid setup. I'm just thinking that because we failed to take the low, because this failed to take the low, that these highs are now also weak. But it's worth the risk to put on. To be honest, it's worth the risk. May's been a good month so far, so it's worth the risk. So yeah, as this high now sort of come into this demand, it started to push back up, which isn't a problem. It happens sometimes, but we're getting quite low in the leg, and we've had this quite a bit of bearish trend for a while now. So we might look to pull back up. Also, we've got this daily demand, which we're not quite in on this chart, but we are on forex.com and Oanda. So yeah, I mean, this is the struggle I've been having over the past probably 6 to 8 months. Is trading the 1 minute wasn't working for me. It just wasn't. The amount of losses you take, yeah, the wins, they make up for it. But say you take 4, 5, 6, 7 losses in a row, and then you get a 25R trade, you've more than made up for it, and you're walking away with like 15, 16, 17%. But what it does to your psychology is quite horrendous. I mean, I spent 2 years, pretty much in Phantom learning Phantom's methodology and trading system. And after about 2.5 years, I realised it just wasn't for me. The 1 minute was too messy. There's too much liquidity going on in there. And yeah, it's more, I mean, it's, you take so many losses in a row and you start thinking you're doing something wrong. So on the next one, you change it, and then that's wrong. But if you hadn't have changed from your original plan, it would have been right. So it just didn't work for me. That wasn't my ideal way of trading for the way my brain works. It works for hundreds of people, of course, but for the way my brain works, this is a much better option for me. I love trading supply and demand, smart money concepts, and this entry model, this Fibonacci entry model, has allowed me to progress my trading even further. And at the end of the day, that is what trading is all about: is self progression as well as learning. Every day is a learning curve in the markets, and if you can't adapt and adjust what you know and what you think uh, to work, then you probably won't make it as a forex trader. Yeah, this is something that I'm not going to give up on. I will either become a multi-millionaire through trading, or I will die in the process. Really, that's it for me. There's nothing else I want more in life, financial wise and business wise, than to be a forex trader earning, 10 plus million a year. And I don't see why that can't happen within the next 5 years, as long as I keep my habits correct and my discipline. I've recently got back into the gym after a serious car crash. Took me out of the gym for 3 years. So, up at 6 in the gym, and then on the charts, and You know, I'm journaling most days. I've got a habitual tracker on, sorry about that, on Notion. I use a habit tracker to track how I'm doing and track my progress. And the only thing stopping me is me. So yeah, I hope this video has been helpful. Psychology wise, if there's something you're struggling with in your trading, don't necessarily change it. Go and back test it. I use FX replay, so you can't go back and say, well, I would have taken this, I would have taken that, because that builds bad habits. Go and back test it, then forward test it. And if it works, when I say forward test, I don't mean putting these trades on, I mean paper trade. Find a setup, put it on Trade and View. Does it work, yes or no? If not, why? If yes, why? Journal. Find patterns that work, rinse and repeat. Simple as that. If something's affecting your psychology, you have to figure out why and then adjust from there. Don't just instantly say, well, this doesn't work, because chances are it probably does. But if you give up now, you'll never know. You never know how close you are to success. Fall down 7 times, get up 8. There's nothing that can stop you apart from you. So yeah, anyway, rant over. I hope you enjoyed. I will be making more videos, best believe it. Again, like I used to say, more for my benefit. I don't care about views and stuff. It's more for me to look back on and, you know, see how I progressed. I'm probably now tagging into this trade, but it's yeah, I'm not, as I said before, I'm not too hopeful about it, but it is what it is. Yeah, and I will see you guys whenever I make the next video. Peace out.